Welcome back. I want to spend this episode on the numbers, specifically on the scale of new aircraft entering service over the next decade and what that means for infrastructure demand. Because I think when people hear 8,700 new business jets, it can feel a bit abstract. Today, I want to make it concrete. Two of the most widely cited forecasting organizations in business aviation are Cirium's Ascend Consultancy and Honeywell Aerospace. They produce independent 10-year outlooks every year, and they've been remarkably consistent with each other. Cirium projects approximately 8,700 business jet deliveries over the next decade, valued at around $277 billion. Honeywell's figure is 8,500 deliveries at approximately $280 billion. These numbers are supported by OEM order books that are full years into the future across all the major manufacturers: Gulfstream, Bombardier, Dassault, Embraer, and Textron. Now let's put those numbers in context. The current U.S. fleet is around 14,200 business jets. 8,700 new deliveries over 10 years, that's roughly 695 per year if you spread it evenly, though the actual distribution is more front-loaded as OEM backlogs clear. That means the fleet grows at approximately 1.5% annually in terms after accounting for retirements. 1.5% sounds modest, but when your base is 14,000 aircraft, that's more than 200 net additions to the fleet every single year, every year for a decade. And here's what matters specifically for infrastructure. Each one of those net additions is a new demand unit, a new aircraft that needs a primary base, a hangar, a maintenance relationship, and FBO services. And the infrastructure to serve all those aircraft is, as we've established, not being built at anything close to the rate needed. So each new aircraft entering service is adding to an already existing deficit, not being absorbed by surplus capacity. The gap is widening year by year, quarter by quarter. Let me talk about fleet composition for a minute because it matters a lot for the infrastructure investment thesis. The business jet fleet is not a monolith. You've got light jets at the bottom, your Cessna Citations, your Embraer Phenom 100s, mid-sized jets in the middle, and then at the top you have the large cabin and ultra-long range jets. The Gulfstream G650, G700, G800, the Bombardier Global 6500, Global 7500 and 8000, the Dassault Falcon 8X and forthcoming Falcon 10X. These are the aircraft that matter most for infrastructure investment for a few reasons. First, they're the largest and most physically demanding. Their tail heights exceed 25 feet. Their wingspans exceed 100 feet. They require more space, taller doors, and more sophisticated ground support equipment. Second, they're the fastest growing segment in the fleet. Long-range and ultra-long-range jet demand has increased by 28% in recent years, driven by corporations and ultra-high net worth individuals who need to fly nonstop between distant destinations. Third, they're the most valuable. A single Gulfstream G700 sells for approximately $75 million. A Global 7500 is similar. These operators are not going to compromise on the quality of their ground facilities. They need, and will pay for, Class A infrastructure. The global business jet market itself is growing rapidly. Current market size is approximately $37.6 billion in 2025, projected to reach over $81 billion by 2034. That's a compound annual growth rate of nearly 9%. 9%. For reference, the broad U.S. stock market has historically returned around 10% annually over long periods. We're talking about an underlying market growing at nearly equity market rates, generating demand for infrastructure that can't be built fast enough. One more data point I want to highlight. In 2025 specifically, Cirium projected approximately 695 business jet deliveries, up 11% year over year from 2024. Supply chain improvements are gradually shortening the backlog, which means more aircraft coming to market sooner. For infrastructure investors, that's not a headwind, it's a tailwind. More aircraft delivered sooner means more demand units entering the market sooner. The hangar shortage gets more acute, the pricing power intensifies. The investment thesis strengthens with every delivery cycle. This is the fundamental demand architecture underlying everything we'll discuss for the rest of this series.